Welcome to Financial News and Review for Saturday, June 8th, 2024, your go-to source for concise summaries of the top financial interview shows. We cut through the noise to bring you the key highlights, saving you valuable time each day. In this video, we will be providing important takeaways and insights for the following videos. From Adam Taggart, Thoughtful Money. We have Will coming week's inflation and Fed news cause markets to pop or drop? Lance Roberts and Adam Taggart. From Kitco News, we have Bitcoin will be shadow central bank. When Fiat fails, it'll be overnight. Bill Barhydt. From Blockworks Macro, we have beginning of the rate cutting cycle. Time to be bullish. Weekly Roundup. From David Lynn, we have debt crisis reaches place of no return. Fed has only one option. Peter Grosskopf. Summary of will coming week's inflation and Fed news cause markets to pop or drop? Lance Roberts and Adam Taggart. In this interview, Adam Taggart from the channel Thoughtful Money hosts Lance Roberts, who discusses upcoming influences on the market, particularly focusing on inflation data and the Federal Reserve's meeting. The core thesis of the interview is the potential impact of the coming week's economic data on market trends. Lance Roberts argues that the market is at a critical juncture where data on inflation and the Fed's commentary will play pivotal roles in determining short-term market movements, supported by detailed analysis and historical context. Key points discussed by Lance Roberts include 1. Market consolidation. Lance elaborates on the recent market consolidation, noting that despite new high records, the market has not significantly moved in one direction or another for 3 weeks. This trend is supported by low volatility and overbought conditions. 2. Economic data weakness. They also discuss the emerging weakness in recent economic data, highlighting the contradiction between high job creation numbers and rising unemployment rates. This dissonance is underpinned by detailed analysis and historical unemployment data. 3. Upcoming Federal Reserve meeting. Additionally, Lance covers the potential outcomes of the next Fed meeting. If the comments are more dovish due to economic data weakness, the market might rally. This is illustrated using historical patterns and predictive analysis. Lance Roberts also makes several key predictions, such as Fed's position on interest rates. Roberts predicts that the Fed may hint at possible rate cuts if the economic data shows further weakness, although actual cuts might occur post-election to avoid political bias. Market rally potential. He believes that dovish comments and weaker-than-expected inflation data could lead to a significant market rally, potentially between 1% to 2%. In conclusion, Lance Roberts summarizes their insights by emphasizing the importance of being cautious amidst mixed economic signals. He suggests that viewers should carefully watch the Federal Reserve's meeting and inflation data to gauge market movements. They emphasize the importance of staying informed and adaptable in investment strategies. Additionally, throughout the discussion, they touch upon various market-related topics, from GameStop's ongoing meme stock saga to the implications of modern monetary policies on long-term economic health. Summary of Bitcoin will be shadow central bank. When Fiat fails, it'll be overnight. Bill Barhydt. In this interview, Kitco News hosts Bill Barhydt, the CEO and founder of Abra, who discusses the potential future of Bitcoin as what he calls the shadow central bank amidst the possible failure of fiat currencies. The core thesis of the interview is that Bitcoin's fixed monetary policy will eventually position it as a core global financial asset, much like gold once was. Bill Barhydt argues that Bitcoin provides a reliable alternative to fiat currencies, which are prone to devaluation due to government monetary policies. This thesis is supported by his comprehensive analysis of historical monetary systems, current economic conditions, and Bitcoin's unique properties. Key points discussed by Bill Barhydt include 1. Bitcoin's emergence as stable money. Barhydt elaborates on how Bitcoin serves as a solution to the historical pattern of governments devaluing fiat currencies. He explains Bitcoin's decentralized nature and fixed supply, utilizing historical parallels and inflationary trends to illustrate its stability. 2. Bitcoin versus current financial systems. Discussion on how U.S. monetary policies and the continual issuance of debt lead to potential collapse. Examples include compound interest effects and reliance on international entities like China buying U.S. debt. Transition scenarios. Barhydt outlines scenarios where rapid inflation and lack of confidence in the US dollar could lead to its precipitous decline. Predicts that parallel to the dollar's decline, other currencies will fail and many might transition to a dollar-backed or commodity-backed standard. 4. Governments adopting Bitcoin. He posits that smaller countries and perhaps eventually larger ones might adopt Bitcoin as part of their financial reserves. An example is cited with Argentina potentially including Bitcoin in its asset reserves due to ongoing economic reforms. Bill Barhydt also makes several key predictions, such as 1. Prediction 1. 50 to 75 non-US dollar or non-euro backed currencies will fail in the next 25 years. Implications include a shift towards more stable assets like Bitcoin or a dollar-backed system. 2. Prediction 2. Bitcoin will increasingly be adopted by public companies and institutions as part of their treasuries. Implications of public companies holding Bitcoin stabilize their balances against inflation. 3. Prediction 3. Institutions will move to Ethereum for financial transactions and tokenization. Implications of Ethereum becoming the backbone for institutional digital asset management. 4. Prediction 4. Solana will dominate the retail blockchain space. Implications include Solana providing scalable and cost-efficient solutions for consumer transactions and new banking models. In conclusion, Bill Barhydt summarizes his insights by emphasizing the importance of recognizing the shift towards decentralized finance and Bitcoin's role in it. He encourages viewers to stay informed and consider the benefits of adopting cryptocurrency as part of their financial strategy, highlighting the significant impact these changes will have on both individual and institutional levels. Bill's remarks underline the growing importance of understanding digital assets and their potential to reshape the global financial landscape. Summary of beginning of the rate cutting cycle, time to be bullish, weekly roundup. In this interview, Blockworks Macro hosts a roundtable discussion featuring Felix, Quinn, and Tyler, who delve into the topic of global monetary policies and market trends, providing in-depth insights and analysis. The core thesis of the interview is how the diverging actions of central banks around the world, especially the European Central Bank, ECB, cutting rates despite high inflation projections, signal a significant shift in global monetary policy. Felix, Quinn, and Tyler argue that this scenario indicates changing macroeconomic conditions and the central message that central banks are prioritizing growth over strict inflation targeting. Key points discussed by the panel include 1. ECB's contradictory actions. Felix highlights the ECB's decision to cut interest rates while acknowledging that inflation will rise. This move deviates from the last few years' central bank policies, signaling potential shifts in how other banks might respond. Number 2, economic slowdown versus recession. The panel discusses recent job data indicating a slowing economy rather than an impending recession. Quinn notes that the U.S. economy is not heading into a recession, but is cooling off from extremely high GDP growth. 3. Impact of immigration on employment. Quinn also covers how immigration is affecting U.S. unemployment rates and wage growth, suggesting that increasing labor supply might be a strategy to curb inflation. 4. Discrepancy in wage growth. Another discussion point is the disparity between wage growth for lower-income jobs versus those requiring higher education. This reinforces how immigration and job types are influencing economic data. 5. Market-based inflation metrics. Tyler points out the difference between market-based inflation metrics, which indicate a disinflationary environment, and the lived experiences of inflation for American workers. The polarization in interpreting inflation data is critiqued. The panel also makes several key predictions, such as 1. Weakening of the U.S. dollar. Tyler and Quinn predict a possible policy shift towards a weaker dollar, especially if Trump wins the next election. This could help boost U.S. exports and support reindustrialization efforts. 2. Continued easing by global central banks. The panel anticipates that central banks outside the U.S. will continue to cut rates. This trend might force the Federal Reserve to follow suit eventually. In conclusion, the panel summarizes their insights by emphasizing the importance of understanding the macroeconomic shifts and the evolving roles of central banks. They encourage viewers to consider how these changes might affect various asset classes, and to stay informed about policy decisions that influence market strategies. Summary of Debt Crisis Reaches Place of No Return. Fed has only one option, Peter Grosskopf. In this interview, David Lynn hosts Peter Grosskopf, who discusses the escalating debt crisis and monetary policies, focusing on their impact on gold and commodities. The core thesis of the interview is that the United States is in a dire financial situation where mandatory spending and interest nearly equal its revenues. Peter Grosskopf argues that inflation is necessary to erode the massive debt load, supporting his claims with thoughtful commentary and evidence. Key points discussed by Peter Grosskopf include 1. Debt levels and inflation. Grosskopf elaborates on the critical state of U.S. finances, highlighting that mandatory spending and interest payments consume nearly all budget revenues. He asserts that inflation is needed to manage this debt load. 2. Gold as a safe haven. Grosskopf discusses the role of gold as a hedge against currency debasement and inflation, noting that investors may turn to gold as a store of value in uncertain economic times. 3. Global gold demand. He covers the geographic divergence in gold demand, pointing out that while Western investors are divesting from gold, Asian investors, particularly in China and India, are increasing their holdings. Additional points include discussions on the tokenization of gold, making it more accessible to retail investors, and the strategic repatriation of gold by countries like India. Peter Grosskopf also makes several key predictions, such as 1. Continued high inflation. Grosskopf predicts that inflation will remain high, driven by the need to erode debt. 2. Increased gold investment. He foresees a potential swing back to gold investment by Western investors if market conditions change or if there is a loss of faith in real interest rates. In conclusion, Peter Grosskopf summarizes his insights by emphasizing the critical role of gold as a hedge against fiscal irresponsibility and economic instability. He encourages viewers to consider gold as part of their investment portfolio, highlighting its historical performance and potential for future stability amidst ongoing financial turbulence. Thanks for watching Financial News in Review for Saturday, June 8th, 2024. If you'd like more time-saving content, please remember to like and subscribe. If you have ideas for more channels you'd like to see, drop a comment below. See you next time.